it's the FMCG stocks that have taken the big chunk of the positivity in the markets. You have those paint companies doing well, but you also have the HULs, the Emamis, and above all the Maricos and the Marico Kayas that have done exceptionally well in the say year-to-date period since the new year rang in. One big advantage they have, of course, is that commodity prices have been falling, as has inflation. So how good are things? How much better are things? Harsh Mariwala, the chairman of Marico, joins us to detail all that. Good morning, Mr. Mariwala, and a very happy new year to you. Well,
good morning.
Let's start by asking you about the margin picture. With commodity prices falling, is that a major tailwind? You should expect that all FMCG companies will have big gross margin gains, even with more ad spends, you will have more OPM gains?
Yeah, I think by and large I would say that yes, most FMCG companies have a fairly decent proportion of their cost structure in terms of base due to crude oil, whether it's paraffin oil or whether it is something which goes into detergents or the packaging material which are plastics. So I think there will be some gains definitely. It will vary depending on your cost structure and the kind of products portfolio you have in your company. But yes, the margin profile should increase, not now, but I think I see that happening actually from the first quarter next year, because there are inventory stocks, and by the time the margin improves, it may take I think 2-3 months. So I think we can see margin expansion definitely in the first quarter of next year.
Okay. Mr. Mariwala, good morning. Happy New Year to you, and thank you for joining us on the show. For a company like Marico, what is the exact exposure in percentage terms that you have to both crude derivatives and palm oil, etc.?
See, I think there are two separate things. One is directly related to crude, which is crude derivatives, as you rightly said, whether it's paraffin oil or whether it's packaging material. I think there is some exposure. I don't have the exact number in terms of percentage, but there is some exposure. And secondly, the other raw materials, which we don't use palm oil, but we use a lot of coconut oil. I think there is some rub-off effect of the fall in crude oil prices on the other commodities also. So I think we have to wait and watch. At this stage, the prices have marginally fallen in case of coconut oil. But hopefully, in the first quarter of next year, we expect some more fall to happen. So difficult to predict what will happen, especially in the area of commodity prices. But there will be some positive rub-off effect of the crude oil derivatives impact on overall our cost structure.
But to what extent may this be shaved off? Because there could be competitive price cutting. Will prices fall? If yes, when? And how much will that impact margins?
See, I think the pricing decision depends a lot on the market leader, because it's the market leader which takes normally a price fall, especially because if you want to increase the market size, then you can actually reduce prices and increase the market size. So I think it a lot depends whether are you there for the consumer, are you there for shareholder, are you there to expand the market or to pocket margins. And in our case, we are very clear that if there is a price drop or cost drop, then we will not hesitate to take down the prices, because in our case we have to expand the market size. In a product like coconut oil, there is a lot of loose coconut oil usage, and if we keep the prices very high, then that conversion from loose to packed will not happen. So I think a lot will depend on what segment are you in, how competitive is that segment, and what are the benefits of price drops. I for one believe that we have to be fair to the consumer, and I think that will be good for the organization also, because if you are fair to the consumer, then the market size also will increase.
What is your assessment of the volume growth in the market itself, Mr. Mariwala? Because we've heard trends, of a slowdown, especially in rural areas, etc. Going forward, at least in the first half of the calendar year, what kind of volume growth do you envisage for the industry as a whole?
See, I think so far in the last few quarters, the volume growths have been muted, and I think that the first quarter of, that means January-March quarter also, I see volume growth to be muted. I see benefits of higher volume growths from 15-16 based on what's happening in the overall economy. Hopefully interest rates will fall, the inflation will fall also, and the mood will also improve. So I think in terms of investments also, the investment cycle will kick off. So starting from first quarter next year and accelerating more towards the second and third quarter, we see demand going up for the FMCG sector. But there's a lag effect in our case because all of us hold inventories at our factories in terms of raw materials, finished products, at our depots, at our distributors end, and finally at the retailers end. So by the time, even if I take down prices today, by the time it starts impacting the consumer, there's a gap of at least 1.5 to 2 months.
Okay. How much are you exposed to global markets, especially to commodity producers who are distinctly weaker in terms of their purchasing power? Will that shave off some volume gains?
No, actually we are not exposed to, in terms of our demand or in terms of our sales, we are mainly in emerging markets, and I mean we have some presence in the Middle East markets, but I really don't see a big fall in, especially in our category of products where the consumption can drop because the economy has not done well due to the fall in crude prices. But I don't expect any fall in demand because of the crude oil prices falling. And our presence is mainly in the Middle East markets, which is mainly producing the crude oil. In other parts, we are not there, like Russia or Venezuela or whichever is the crude oil producing nation, which in which case the economy of that country will get impacted.
Is digital a big challenge as yet, Mr. Mariwala? Are you losing markets to that? We understand that Baba Ramdev is selling almost 2,000 crores of business largely on the net, his Patanjali products. So, I mean, obviously it's a growing market. Are you tapping it, or is that competition for you?
See, I think we cannot ignore the movement in digital marketing, e-commerce. So far, the impact on us has been very, very minimal. We have a separate wing for digital. We see it increasing over a period of time. At this stage, only less than 1% of our sales go to the digital channel, the e-commerce channel. But within our portfolio of products, there are certain products which are high-priced products. We have bio oil, which is sold, a lot of substantial quantity of that is sold through the digital channel. So I think we have to be geared to the changing scenario in terms of what's happening on the digital channel. And it's a matter of time, it will increase, but it will not nowhere be near the percentages which the consumer durable segments are able to go towards. So we don't anticipate a big threat, but I think we have to be alive to the challenge of conversion from our physical distribution to the e-commerce channel.
Do we see you advertising more?
I don't know yet.
No, you have more money, you have more gross margins.
Overall inflation. Not yet. I think we could see that a little later, after maybe 3 to 4 months. So I think a little too early to predict what will happen to the raw material prices. Definitely crude derivatives have gone down, but we also have to wait and watch in terms of our core raw material, which is copra or curdi or other key raw materials, which are not directly dependent on crude prices.
Fair enough, sir. Thank you very much. It's a pleasure speaking with you, Mr. Mariwala. Thank you very much for joining us with your perspective on what might hold for this sector in 2015.